Klarna's US IPO is about to shake up the entire fintech listing landscape. This is not merely another market event. It's the potential catalyst that could unlock a dormant pipeline of British fintech flotations. The facts are clear and undeniable. Klarna has publicly filed to float on the New York Stock Exchange, marking its second attempt at entering public markets in just 4 years. Let's analyze what's really happening here. In 2021, Klarna's valuation skyrocketed from $5.5 billion to an astounding $45.6 billion across just 3 funding rounds. This wasn't sustainable. As interest rates climbed and economies faltered, investor sentiment tech companies soured dramatically. The result? Klarna was forced to slash its valuation to $6.7 billion in its 2022 fundraising, an 85% drop from its peak. Now Klarna is back, and the numbers tell an important story. Industry experts project a valuation of at least $15 billion for the IPO, with pricing likely set for the first half of April. This represents a significant recovery and sends a powerful signal to the market. James Wootton, a partner at Linklaters who advised money transfer company Wise on its 2021 London listing, states it unequivocally, any successful IPO of a high-profile business in the sector will be a catalyst for others to look again at an IPO as a strategic option for growth and/or liquidity. The data reveals a stark reality about the fintech IPO market. At the peak of post-pandemic fundraising in 2021, 101 fintech companies raised nearly $297 billion via IPOs globally. Compare this to the period between 2022 and 2024, when just 86 firms raised barely $33 billion. The decline is both severe and undeniable. Tim Levene, chief executive of London-listed fintech investment fund Augmentum, puts it plainly: it's quite clear that the market is looking to Klarna as a bellwether for future fintech IPOs, many of which are in a long pipeline. This isn't just speculation. Multiple high-profile UK fintech companies are actively preparing for public listings. Challenger banks Monzo and Starling, alongside payments companies Zilch and Ebury, are all considering plans to list. Zilch CEO Philip Bellamant has confirmed they're targeting a 2026 float and watching Klarna's IPO closely. His assessment is direct. A successful Klarna IPO could set the stage for greater investor confidence in European fintechs going public. The timing implications are significant. Ebury, a Spanish-founded payments company majority owned by Banco Santander, is preparing for a London listing as early as June. Sources indicate they'll seek a valuation around £2 billion or $2.6 billion. Britain's most valuable startup, Revolut, has previously signaled IPO intentions but remains non-committal on timing. As their spokesperson states, "Our focus is not on if or when we IPO, but on continuing to expand the business." Similarly, London-headquartered Zopa has no firm timeline but confirms they continue to plan towards an eventual IPO, preferably in the UK. This measured approach makes strategic sense. As Patrick Evans, head of UK equity capital markets at Citi, observes, a lot of them have the luxury of being able to choose their time. Klarna's choice of the US for its listing venue intensifies an important debate about where these growing fintech companies should list. Monzo has discussed floating in either Britain or the US, but has set no firm timeline or venue. Meanwhile, the London Stock Exchange is actively courting fintech companies, including Zilch. This competition between exchanges reflects the significant value these listings represent. The implications are clear. Klarna's IPO represents more than just one company going public. It's a critical test case that could revitalize the entire fintech IPO pipeline after years of stagnation. For investors, regulators, and market participants, the message is unmistakable. Watch Klarna closely. Its success or failure will reverberate throughout the fintech ecosystem and potentially reshape the IPO landscape for years to come. This is Fintech's Fair Play, providing you with the analytical edge on the most consequential developments in the financial technology sector.